Hello everyone, welcome back to a new Process Mining Café. It's the first one after the summer break. So we are very happy to welcome you here today for an all-new cafe. We got a lot of feedback also for the last cafe where we did a recap session for the Process Mining Camp, and especially also the challenges that we collected during Process Mining Camp. So we made a big article with a collection of all the different challenges that you encounter during a Process Mining project and the best practices that we collected during camp. So I want to share some of the feedback that we received with you later, so you'll probably hear more about the whole topic of challenges. Now today we are doing a research spotlight. So in the cafe we focus always on process mining and many practical topics, but also we are always happy to speak with researchers who are active in the process mining line of research in process mining. And so today we are here with someone who's already active in process mining research for a long time. I'm happy to welcome Mieke Jans from Hasselt University. Hi, Mieke.
Yeah, hi, Anna.
It's great that you can be here, and we are going to talk about process mining in audit, so auditors, and we are going to explain in a moment what this is for those of you who are maybe not familiar with what auditing is, and then talk about some of the research methods and some of the work that Mieke has done in the past. Just a quick note before we start. So normally we have a chat where just below the video where you see me talking right now, you can join the chat without an account, just writing your name and entering the chat to talk with us while we are on the air. It looks like there's some technical problems with the chat server we have been using. So if it doesn't work, you can try, but if it doesn't work, don't worry. It's not possible due to this technical problem, and you can send us an email instead. So if you have any questions or feedback or any comments, you can email us at cafe@fluxicon.com or any other email address that you find on the website. So that just to get us started, and we are happy to have you here and to start with our Process Mining Café about audit research. So Mieke, maybe you can start by explaining a little bit how you started to get involved into auditing as a research topic, as a process mining research topic, and also explain a little bit what an auditor is and does for the people who don't know.
Okay, thank you, Anna. Also, thank you for having me. So the first question, how did I get started in process mining combining with audit? And I will immediately take along the second question, like what is audit actually? So when I was doing my PhD, which is already quite some time ago, so I'm talking around 2005, something like that, I was investigating how to detect fraud within a company. So how does that resonate to auditing? So a company each year, certainly the larger companies, they have to file or publish their year-end report. So they have to publish their income, their losses, their costs, the assets that they have, the liabilities that they have, etc., etc. These are very important reports because investors, banks, they rely on them. Also, just people like you and me, when we want to buy some stock somewhere, we would investigate the financial health of a company based on those reports. So as these are so important, there is some kind of a quality check whether these reports actually give a fair view of what the company actually, about the financial situation of the company. I'm now stressing on the finance part, and meanwhile it's also larger, but let's focus on the financial part. So what happens is that an external independent party is then hired, and that's the external auditor, who takes a look at those reports. But those reports are obviously the end product of a lot of transactions and things that take place during the year. So the external auditor tries to assess whether these year-end reports are a fair view, and they do so by also looking at the environment and the processes, how these reports are developed. And that's where you already notice the word process, and process mining comes into play. So I was doing my PhD in the context of a large multinational bank. And I was investigating how data mining could assist in fraud detection. So I was not playing like the role of an external auditor, but larger companies also have their internal auditors. So more or less independent, as much as it can be, department within a company, to check whether everything happens according what you would expect and that risks are mitigated. So from that angle, I was doing my PhD in the context of that of their internal audit and actually their forensics department, to check how data mining could be of interest to detect whether people were internal people, actually employees, perhaps committing fraud. And at that moment, my supervisor of my PhD said, well, you should talk to someone, Professor Weters at that time, Anton Weters, of Technical University of Eindhoven, probably very familiar to you where you come from. Because that person is working on something called process mining. It could be interesting to have a look at that new technique, how this could be interesting for you. So I still remember visiting Technical University of Eindhoven and getting my one-on-one from Anton Weters at his office on what is process mining, and that's how it actually all started.
Yeah, great. That's it's a long time ago, right? So back then, process mining was also really new as a research field, right? It was just starting. 2004 is when we started. So it's basically the beginning of the 2000s that the first research papers were published.
Yes.
So maybe if we talk a little bit more about this distinction between internal and external auditors, right? So you mentioned them already, that the external auditors, they come from the outside. So these are usually the big four, right? The KPMGs, what are the other ones?
The EY, PwC, and Deloitte are the typical big four, but you also have others like BDO is what they call them, second tier.
And so then these are the big companies. They are required to have their financial accounts checked, right, by these firms, and then they come from the outside and they're supposed to detect fraud. Is fraud the only thing that they're looking for, or how is it related to what they're looking for? With how does it align with process mining?
So actually, they're to be correct, it's not expected from the auditor to detect fraud. This is really like a very thin line, because if a company really intentionally covers up that they manipulated their books, how reasonable is it then to expect from the auditor to detect that? So the assignment of the auditor is not you have to detect fraud like very black or white. So like, for example, with the Transfire fraud scandal, there's a whole lawsuit now on can you blame the auditor that they did not see it, yes or no. So the main task that an auditor has is, as they call it, to provide reasonable, and there is a subjective term, to provide reasonable assurance that the reports reflect the financial state, actually give a true and fair representative view of the company. So it's broader than only fraud. So the auditor should be able to say, well, given how you implemented a bunch of controls and the actions that you take to mitigate certain risks, it is reasonable to expect that the numbers that come out of these processes are a correct view of the current state of the organization. Yeah.
And would you say that the internal auditor has the same goals or similar goals? And if they are different, how are they different from the external auditor?
Yeah, that's a good question. So the internal auditor certainly has an overlap with the external auditor, but obviously it's not exactly the same. So they will look with through that same lens, but obviously they cannot replace the external auditor, as they are not fully independent. But they will also look more broadly into the effectiveness of an organization. So on the one hand, you have the compliance. Are we compliant with all the rules? And our financial reports of a good quality? That is of primary concern. But an internal auditor, well, they also want to, perhaps there's more pressure, let me put it like that, to also create more business value on top of the assurance on the financial reporting. So to give an example, I once did a process mining project with an organization for the internal audit department. And they, during that project, we found out that there were 8, on average, every purchase order was approved 8 times on average, every purchase order. So it's a very nice example of where an external auditor, they wouldn't care. They would say like, oh, great, we are quite sure that every purchase order got an approval. But the internal auditor would say, wow, we can make a huge improvement here if we reduce that number of 8, because as the person literally said, are we really paying people to approve a purchase order 8 times? So that's more like a nice example that shows the different hats that the internal and the external auditor have.
Yeah, that's a nice example. So they are looking to make sure there are good systems in place, but maybe necessary systems, not more than what is necessary to have the same result, right?
Yes, they're more interested in also in the efficiency and not only on compliance.
Efficiency, yes. One thing I remember when I was looking into or learning about auditors, how they look at a process, or they are looking at different levels, right? They're looking at the systems, they're looking at the controls, and then there's the in Dutch it's werking, the working, like what is actually happening. Can you explain maybe about these different levels?
Yeah, so big disclaimer, I'm not an auditor. So for all the professional auditors in the room, if I say something that is not fully correct, please forgive me and don't hesitate to drop me an email afterwards. Indeed, on one hand side, you're going to look at the transactions that have passed controls, and because that's in the end what needs to be correct. The transactions that are listed, for example, there were so many sales. Well, did all these sales take place? For example, did they take place in this period for the right amount of money that is allocated to that, etc., etc. So those are the recorded transactions that an auditor is interested in. At the same time, they will look at all the implemented controls that should safeguard that the transactions that are included in the reporting are indeed timely, accurate, complete, and all these check boxes. So if you have a look at the controls, and I compare it with like these gates that the transactions need to go through, and then only if the transaction meets a set of criteria, the gate will open. So an auditor will also look at these gates, and traditionally, before using data analysis, this was really like a snapshot. You look at the gates, these controls, you go in, you check how are they configured, and you try to push through these controls. You try to push a transaction through it that, well, the gate should not open. And if you notice, I can't push the transaction through, then you say, this gate functions nicely. So this control that is implemented to mitigate a certain risk, this control functions nicely. Obviously, when you leave and someone tweaks that control again, you do not have a view on that. And that's where, that's by the way, where process mining comes nicely, and all data analysis, more full population testing comes into place. It will check all the transactions that have crossed through that gate, and will check them after it was gone through the control, that the control do its job, because all those transactions went through it, so they should all meet the criteria. And then what you call the werking, so the functioning of these controls is typically also tested, as I said, by the the stress testing, trying to push something through that should not go through. And you classically also have the walkthrough. So you take one process instance in our terminology, and you will follow that from start till the end through the whole process flow, and see how everything goes, and also see with your own eyes how the controls are implemented and how they function.
Yes, yeah, exactly. So maybe just to make it concrete and maybe give an example for what such a control could be, that could be, for example, segregation of duty control, or could also be sometimes it's value related, right? For example, if an order is above a certain threshold, then there needs to be an additional sign-off. Or maybe can you explain segregation of duty? That's such a common audit-related rule.
Certainly. So segregation of duty, abbreviated as OD, otherwise called 4 eyes principle, means that not a single person executes 2 different activities that should be separated. So very tangible example. If I create a purchase order that I want to order a new laptop, for instance, at my university, then someone else needs to approve that purchase order, and it should be someone else. And so the segregation of duty is that it will indeed make sure that if I create the order, that someone else is approving the order. The difficulty there is that you cannot say, like, we only give these people the access rights to create orders and another set of people to approve purchase orders, for example. That's typically not the case, because typically these activities are also within the business, as we call it, so not at the finance department or the purchase department. Depends, obviously, how your organization is organized, but also certainly with smaller organizations. So this day I want to order something, so I create a purchase order, and it's perhaps a colleague even at the same level if you're a smaller organization, or a higher level that approves what I want to order. But tomorrow maybe it's my colleague that wants to order something, and then I need to approve. So if I would have had the access right only to create an order, I could not approve. So that's, you assign access rights to do certain elements in a system to a certain person, and it's important that that person is not able to combine those access rights on a single case, and that's where this whole process mining is very valuable, because it's that case notion, the fact that you follow one case throughout the process, throughout its life, that allows you to check whether this segregation of duty has taken place at the case level. It was actually one of the biggest advantages, or my selling propositions when I was working at a consulting for auditors, that I could help them with evidence-based checking whether segregation of duty was fully implemented.
Yeah. That's, you explained it very nicely too. That explains how it would be too limiting to have it kind of assigned these rights separately to people. So what then happens is that on the system level, right, on the ERP system or in the workflow system, there's an additional layer of control where then it's configured in such a way, for example, for the same order, 2 different people need to, for these 2 activities, like create, approve. So that's a configuration kind of on that system level. And that's, I think, what we were talking before with the different levels. So an auditor would check the system and would make sure that the system is configured correctly, so that the rules that exist are actually implemented, configured correctly in the system. But then with process mining, right, like you explained, you can then actually check it, and not just based on a walkthrough where you pick one case and you see how the system works for this one case, or based on a sample of a few cases, but you can do it for the whole year. So that's the other selling point, probably, right? For process mining.
Yes. That's a selling proposition indeed. There are some downfalls that come along later, but that's the biggest asset for using audit analytics, actually, and use of full population testing.
Yeah, and then you have a higher assurance because you can be more sure because you checked everything and not just a subset.
That's the rationale. Yes, you check the transactions that have gone through these configured controls, and if all those transactions meet the criteria that you would expect, the underlying assumption is, and it's an indirect link actually, that you assume that the controls have functions. And there's something odd there as well, but maybe that's for later.
But also roles could change, right? So for example, if one person isn't allowed to do something, has a different role today, tomorrow, so it could be that because it's always, like you're saying, it's always a snapshot, right? The configuration is now, but once you change roles and permissions for people, there might be cases where they're actually able to do something that is not desired.
Yeah, correct. The whole identity access management element within an organization is very important here, and that's not always fully included in an auditing.
Yeah. And one thing that I found also interesting once I heard some stories from auditors who used process mining is that there are organizations that are actually smaller who cannot. I'm not sure if it's because they don't have these types of systems where these kind of control configurations are possible, because maybe if things are done more manually on paper or through email, you don't have a mechanism, right, like that, right, that implements a segregation of duty control. But sometimes it's also because they often it's actually implemented by different roles and they cannot afford kind of to separate the roles, like similar to the example that you had before. So that then sometimes leads to a situation where they have this control as a rule, but it's not implemented in the system. But they still have followed the rule in reality, right? So then with process mining, you can actually look at the logs and you can show, well, the control isn't in place, but actually in reality there were no violations. So at least for that year you can give this kind of blank check.
Yes, and that's a really nice example, as what I said before, that it is not foolproof to say, well, there is a lack of evidence that something was violated, and to put that equal to, so we can conclude that the control is functioning correctly. So that's very, very important to realize that this lack of evidence that the control has been violated does not mean that the control is configured properly.
Yeah, exactly. Yes. So now I'm curious, like when we think back to when you started with this, so process mining was very new. You were one of the first ones who were applying it in this audit context, right? What was your focus in the research then? Just doing process mining in the first place, or how to put it together with auditing? And what were maybe afterwards a little bit kind of the next steps, like in this line of research? What did you and your colleagues look at?
Yeah. So in the beginning, it was, if I now look back, was different type of research that I'm currently doing, because at that moment I was literally the first one who looked at process mining in an accounting setting. So it was very exploratory in nature. It was checking whether these new ideas stemming more from computer scientists and people like you were coming, and whether those ideas and techniques were, well, could we really use them in a real life setting? So it was more like, okay, this bank is using an ERP system. They're representative for so many large companies. So let's do the proof of the pudding is in the eating. So it was very exploratory nature. Like, can we really extract the data that we need from an ERP system? How difficult is it? Can we transform it into an event log, which later turned out the biggest issue to conduct process mining? And the insights that we then have, are they really valuable for the auditor or for the setting that I was working in? So that was my beginning research. There was very exploratory nature. So research method was case study. There was nothing else possible. I could not do anything empirically. And then later on, so after my PhD, I worked for 5 years in consulting. So I was not doing research at that moment, or otherwise called, I could call it later on action-based research, because I was still investigating a lot of things, and I was primarily developing my own expertise in how to build these event logs, because there was no knowledge available. I had to start from scratch every time again. And so that was actually the first thing that I picked up when I returned to academics. That was now 10 years ago. In 2014, I returned to academics. And that was the first topic that I thought, okay, let's investigate this from an empirical point of view, because I noticed that there were a lot of design choices that I took when I was building an event log, when I was putting all the data from the ZRP system together such that I could feed it into process mining algorithms. Mm-hmm. And I realized very quickly, like, hey, but if I would have taken a different decision, I would have had a different event log. I would have, as I call it, I would have taken a different picture from the same building. And so if you take a picture from the front of a building, or from the back, or from within, from the inside, it's the same building. I took a different picture, so I will be capable of answering different questions. I will be capable of seeing or spotting different patterns depending on the picture that I took. So this became then my topic of interest to investigate more empirically. I did that at that moment with like interviews and surveying, and I noticed that there were differences between, is an auditor building the event log, or is someone from the business building the event log. Actually, it was long on my wish list to really investigate this with an experiment. Like, let's take one data set out of an ERP system. Let's create 4 different event logs from the same data and have 4 groups of auditors analyze it. Would they come to the same conclusions? I'm really curious. I still did not get to do this. I did not have the setting. Still interested in this though.
It would be so interesting. It's like I think this exists sometimes for software engineering, right? That the same problem statement, the same requirements are given to 4 different teams, and in parallel they work on it and they come up with something. And in the end you can look at, okay, this was good, this is maybe better here, right? So you would see, I'm sure, quite some differences in these
yes,
teams.
And it's still very relevant, because with all object-centric stream now in process mining, I know you can say, but yeah, you can easily, because that's what it boils down to, which object are you following? So there's now tooling that you could easily switch the viewpoint, take a different object. I have not worked with it yet, to be honest, but still the question remains, what if you change your viewpoint? What is the impact of that? So in terms of academics or research wise, it came from, it's not very exploratory. I went to more empirically and trying to really understand what the differences are. But I'm also working more on the engineering side, with, for example, Manal and Mernouch, 2 of my PhD students, and Shamir also, for example. But how can we help the auditors if we have all these deviations that at first sight do not fit the model? They do not behave like what we would have expected. How can we sift through them? Because a bunch of them are false positives. So how do we go through them? So can we develop a classifier that takes into account the auditor's expertise, or implements a human in the loop element, to help the auditor go through all these thousands of deviations? So then you lean more to, you move away from the empirical research, and you move more to the engineering, and then you're in the stream of applying design science research methodology. So from an academic research point of view, it's quite a broad array that I have been gone through, and I'm still working on.
Yeah, nice. And you brought 2 pieces of work, right? Or 2 subjects of more recent research that you wanted to share with us. So maybe it's a good moment to start with the first one, which is about analyzing deviations, like you mentioned.
Indeed. So thank you again for the opportunity. So one paper in particular that actually started, I think, also our conversation on behind the scenes was publication in JIS. So it's work of Merno Saintpour and myself. Is where we investigated how auditors look at deviations. So the original idea that we had was to do more engineering to develop something that grouped similar deviations into similar groups. So we thought, well, if there was you have a process trace, like create purchase order, approve purchase order, place the order with the supplier, etc., etc. And some activities are swapped, and well, let's put all of them together. But then we started to having all these discussions. When is something swapped? If, and now I will just refer to some letters because it's easier, A, B, C, D. If you turn B and C around, I would call it a swap. But Merle said, no, actually you then have A, C, B, so C is just pushed forward. So it's more like pushed forward and B is too late. And so we had all these never ending discussions of how you should look at a simple trace like A, C, B, D when it was expected to be A, B, C, D. And so that's when I said, okay, stop. This doesn't make any sense. That we keep on having these internal discussions in our room. We have to investigate how auditors look at this. And that's how this idea was born. So we presented a bunch of auditors with a normative process model. So like, imagine this is the model that the organization that you're doing an audit engagement that wants to execute their purchase to pay process. And these are the traces that have been identified during a process mining analysis. And we just gave those traces to them one by one, and we asked them to speak out loud and to tell us what they saw. And then we did a verbal protocol analysis of the terms that they used. And well, it turns down, and I provided you with the first slide with the outcome of that. So you will see this one. To the left and in the right, I could not put it in one column. These were the deviation patterns from literature. So skip, repeat, loop, insert, swap, replace. These were all terms that we distilled from academic literature. These were also implemented in different papers, and that's where we started having our discussions. But as you can see in the middle column, it seems that lexicon that auditors use is much more simple. It's said, and do not get me wrong, that this is without judging on them. They take it just like more straightforward. So they only had like, well, something is missing, something is duplicated, or something is reordered. Sometimes they use the word insert, but not a lot. So basically, for example, this swap that we had, they never used this word like swapping, like putting two things on each other's place. They never looked at it. It was more than, this is maybe a combination of, well, in the beginning you missed something, like when you would have expected this B. They did not see it as like, oh, they switched places. They start like A, and then, oh, I missed B, and then I see C, oh, and there is B, so they reordered it. So they look at it in not a completely different way, but less fine-grained way, where we would see a self-loop because it's right after each other and it's the same activity. It's just a duplication. There's no difference whether you repeat it a few activities later or immediately. It's a duplicate. It's there more than one, so it's a duplicate. Even if it was 3 or 4 times, it's a duplicate. So this was very interesting to see, and I think this is the type of research that I'm actually very fond of, because this it's important to take the next step when you are developing or fine-tuning or improving the process mining tools, such that you resonate with how the structural schemas, the knowledge schemas in someone's head are. So you have these professional these knowledge workers, and they clearly have one lexicon because we very quickly reached data saturation. It was not that every auditor came up with new terms. No, very quickly, they all looked at these traces in the same way. I think after 2 or 3 interviews, we already had, afterwards looking, we already had our full stack of these 4 terms, and they did not change anymore. So it's important that if we run process mining analysis, that we know that auditors think in these terms, and then we can take the next step. Like, okay, now we know that they look at this way to deviations. We can perhaps group the deviations in these meaningful categories, because that was the whole discussion. What is resonating to them? Now we can group them in these meaningful deviation groups, and we can continue investigating and drill down to have an idea whether these deviations are really worrisome or whether those are actually process executions that are perfectly fine but are not covered in their normative model. Yeah. So that was the first study.
And on a research method level, you did interviews where you showed them concrete scenarios and then you asked them to describe without giving yourself kind of the academic terms, but just to see how they describe.
So we developed our instrument based on what we found in literature. So we had a normative process model that we also did some pilot testing that felt very natural to them, that they were like, yeah, this makes sense. This is how I would expect it with an organization, because that's obviously important. If we would already start with a normative model, that they would say, I would never buy this. If I would have been an auditor, I would say them to do it differently. So we made sure that was, that looked very logical to them. And then we started from those categories that that were on the slide, the theoretical categories, as we call them. So the process deviations, and so here you see the skip, repeat, loop, insert, swap, replace. So we made sure that we have from these different categories enough examples, but different ones. And then we showed these a set that contained these examples, overlapping sets, so not exactly the same. So they had some different variants on the same deviation category that we had from literature. That's how we built the instrument. And then they all discussed, indeed, we showed them the trace, the normative model and the trace, and we just asked each time the same question: can you please describe what you see here? And we did not even say like this is a deviation or whatever. We just said like, this is a trace that was discovered during the process mining analysis. Can you first please describe what you see? And then we also had a follow-up question because we wanted to investigate also the risk element of that. But the information they gave was not rich enough, but we also asked them like, how would you judge this from a risk point of view? Would this be a trace that you would signal to your colleagues to investigate further or not? But actually the bottom line, they did not have enough of information with the control flow information alone. So that was a key takeaway from us. They cannot judge on only the control flow.
Okay, exactly, because of those rules like the segregation of duty or 4 eyes principle,
indeed.
Right? That we discussed before, because of that?
Yes, or like you mentioned, you gave the other example, like a second signature needs to take place if the value is higher than €1,000 or whatever, some threshold. So they missed those data elements that are not included in simply the sequence of the activities. That's why. Yeah.
Okay, and so this was one piece of research where you were looking like how are they thinking, how are they describing these deviations, and then you also already mentioned you were also asking them about how serious they found those. Is this leading to the second paper that you wanted to discuss, or was that something else?
Yes, no, this is not leading to the second paper that I wanted to discuss, but indeed there was the follow-up research that we had a look at how they perceived these deviations, how risky they were in the end. By the way, the figures that I provided you with, I just realized they are from that paper that I was actually not planning on to to deviate.
Maybe for those who are wondering, so we are definitely going to link, as always, to the papers that Mieke is mentioning here. Also, by the way, in the beginning you told us how you developed this method of creating an event log from any ERP system based on understanding how the choices that you make in building the data set influence the analysis that you do later. It's something that we have pointed people to many times over the years, so we will link all of these things in the show notes with the recording later. So you can read more about the research we are discussing here.
Yeah, that's nice. Thank you. And if there are any questions, by the way, from people that read it, please drop me an email. Always happy to start a conversation. The second study that I was happy that I could give some attention to. This is still work in progress, so it's not out there, and it actually moves a little bit away from process mining. So I had to ask Anna whether it was okay also, because it's not process mining in the pure sense of process mining, but still I think it's so important and so interesting from an audit point of view that I'm happy to share this little this different view on how can process mining or the process view be used in an audit engagement. So as we already touched upon, the way that traditionally, and I'm not talking about now contemporary audits that make use of audit analytics or process mining, but traditionally the focus was really on the controls. The auditor was going to check whether those controls, so starting from risks, which are the risks that are there, which controls are implemented or should be implemented to mitigate this risk. Now let's have a look at this control. And we look at it, how is it configured? We do some stress testing. We check certain cases that went through this control. And the focus was really on the control. But as was already mentioned, then you have this one moment that you can provide assurance on. And over the years, we turned to data analysis, and the auditor moved away from looking at the control and looked at the transactions. And as we pointed out, if every transaction is fine, we can assume that the control is functioning. And I will already warn there, like, this is dangerous. So if I would go and have a look at my students in Hasselt or in Maastricht, and I would check whether they have guns, none of them, I assume, would carry a gun. It would not be correct to say, well, see, this whole metal detector at the entrance of the university is working very well. No, there is no metal detector. So that's basically what you do. You look at the transactions that have gone through a control, which you hope will function correctly, and you make an indirect assurance. You give indirectly assurance over the functioning of the control. And we saw that as a flaw, but on the other hand, the full population testing is so powerful. So Justin Pawlowski, so a PhD student of Mark Eulerich and Duisburg SE University, he was working on a different approach, which is very interesting. So we try to combine here again to put focus again on the control and not on the transactions that pass the control. So what did we do? Instead of checking whether the criteria of the transactions behind the control are met, we are checking continuously whether the control has been activated when we, according to the process, expect that control is activated. And it gives an alarm if it isn't. So you would expect, for example, the segregation of duty, that this control is run every time when, like, an approval is given, that this control is activated. But apparently there are tons of reasons why although it seems to be configured correctly, if you look at the configuration of the control itself, there are a lot of surrounding elements that have an impact on the effective activation of the control. So we launch an alarm each time if a control has not been activated. So we do not look at the transactions anymore. So this creates tens of thousands alarms on a daily basis. So when we started with this, so we put it's like putting a camera on the controls. If it's not activated, bang, an alarm. 30,000 alarms on one day for a certain cycle where I think more or less 8 controls or something like that were watched, to put it like that. So obviously you cannot check 30,000 controls, but what we then did was we did a root cause analysis and we investigated why the control did not work. So we took the what could go wrongs, which is a typical term that auditors use, like what could go wrong in terms of the reporting, and it's more in terms of the process executions. We took those terms, what could go wrong, for what could go wrong such that the control is not activated. And it could be that once when someone creates a new supplier, so that's in the master data, that's not typically in the transaction data. In the master data, no credit control area or something is filled out. So something in the master data is not of a good quality, and that could impact the activation of a control later on. And there, all these root causes are quite widespread. It's not common knowledge that they have an impact on the activation of the controls. So what we did was we had all these alarms coming in, and actually Justin then checked one by one. He just started, took the first one out of the 30,000, looked how come this control did not fire when it should have been fired. He identified what the root cause was, translated that into what could go wrong, like apparently this could go wrong. And then you create an additional rule, actually, control if you want, to implement in your system, such that, take the example of not filling out something decently during the master data set. And so you're entering a new supplier. Immediately there, it is launched, like you need to fill out this credit area or whatever, or this pointer, because otherwise we will have a problem with a control. And so we started doing this systematically, addressing the root cause that prevented the control when it was expected in the process. So that's why it's still linked to the process. You follow a process, you expect a control to take place during a process. And so we looked at the root causes, we addressed them, we made sure that this actually could not take place anymore. He did this systematically for 2 or 3 months, and the daily alarms went from 30,000 to 4 alarms per day, which is perfectly capable and manageable. And now this is the nice thing. You go from true continuous monitoring setting, because you monitor literally all transactions in an indirect way, because you look at all the controls. So you actually switch the order how you did it before. So it's true full population testing, and you look whether the controls, and you focus on the controls. So your assurance is a direct success from where your focus was, as opposed to the indirect assumption that the metal detector in my university must be very good because I do not have any guns. Yeah, so that's really like such a nice twist in looking at things in the auditing field, that I was very happy that I could share this different way of looking at things, because I have the impression that this is really like moving outside of this box in automating. So when there's new technology, the first thing people start doing is automating what they were doing. And the more difficult step is take a step back and think, wait, there are so many more things that we can do right now. We have digital traces of everything. We have so much data. What can we do with it? And aside from automating what we are already doing. And I think this is a very nice example of really taking this step back and then taking another step in a different direction that leads to, in my opinion, a higher level of assurance than before.
Yeah, thank you for sharing that. I think it's such a nice kind of closing the loop way, because we started to talk about the controls, right? How auditors traditionally only looked at the controls and not really only based on samples, based on the transactions. But now you're going back to the controls. But also, I think what is interesting there is, in a way, you're looking at logs of those controls functioning or not functioning, right? So the alarm is kind of an event log event, or maybe the activation of the control would also be one. So you're looking on that level and at the logs, and doing it a different way of process mining there. So really.
Yes, indeed. If you look at it like that, you have like these mini traces of the activation and then or the enactment and then the activation, like a two-step process, and that you immediately focus on the deviations from the normative model where both steps should take place, and here only one step takes place. Yep. So in that sense, it's still process mining.
Yes, and I think that's also, it's a nice example because it's a different area. And just in general, I think it's a really broad application area, audit, right? Auditing. We already talked about the differences between external auditors and internal auditors. I think in one of the, that's a question I wanted to ask you. So in one of the papers where you wrote like how process mining can be applied for, in audit, you also took the broad view and described how process mining can be applied already in the audit planning phase, where when auditors, especially internal auditors, they usually make an audit plan for multiple years, for maybe the coming 2, 3, 4 years. So they decide which processes they're going to audit. So in a way, you could apply process mining already there to see where maybe problematic processes are. So have you seen this somewhere in practice, or you think it's a logical way to do this?
I recently had some conversations with also larger some multinational, and I'm not sure whether they really apply it so strictly. But what I heard from, so they have to audit a lot of plants all over the world, and so if I understood them correctly, they really are inspired by how spaghetti-like the processes look like in order to drill down more or less into certain plants. So I hear sometimes these examples and I think, well, they are nicely doing that. But to be honest, I think those are the exceptions, because you need to be a very large organization to have the resources to build and to have standardized all these processes and the event log building phase for each of them to quickly run a process discovery. So once you have that, it's easy. If you have everything in place, you can run a process discovery algorithm, and then you immediately see how structured the process is, more or less. But I'm not so sure that it happens really as a default.
Yes, no, of course it's not the default. Usually people start putting the data together when they, in the preparation for the audit. But I think, of course, if you build, you can always, that's always the goal, right? To set up the systems perfectly, to have everything automatic and easy. But I think that's not needed. So from what we see, and in the run-up to this cafe session today, we shared some of the examples that people presented for process mining and audit over the years at our annual process mining camp conference. And you see from very early on, they have been able to apply process mining to all kinds of systems. And it's not always complicated, right? There are many systems where actually, especially auditors, are quite good at, they need the data. They usually get the data, first of all. Sometimes the business units, they have to wait. They're not a priority. But if an auditor says, I need this data, they usually get it. And there are many systems where the data can be analyzed right away. And I think what I really like also about your work is that you make it then very practical and pragmatic. So, for example, we will also link to that article where you kind of describe process mining for auditors, where you also give some of the metrics that people could be looking at, for example, right? If they have multiple candidates for an audit, you mentioned you can look at the number of cases, so that would be volume, clearly. Like if there's a process more high volume, that's maybe bigger risk, so it's maybe more important to look at that.
More material.
Yes, but the kind of the variation, so you brought it down, like for example, how many variants per 100 cases, right? Or how many variants do you need to cover 80% of the behavior? And I think these are very good kind of metrics that people can use to get started.
Yeah, and it's a nice thing to see that I sometimes see also companies really using those metrics. So that's in their dashboard. So that's nice to see.
Yeah, and you can apply it right away, right? So you don't need to have anything. You can just do the process mining analysis and apply those metrics to calculate them and to get started.
Yeah.
Okay, so maybe. Yeah, so thanks for sharing this more recent work. Of course, you're going to continue with your own research. In general, for maybe researchers who are joining process mining research or interested in this line of research more on the audit side, do you have any tips or recommendations for those?
Yeah, sure. It is, I think, very important to always talk and listen to the professionals in the field. So in this case, the auditors. Talk to auditors who do apply process mining and listen to their struggles. Just ask, like, okay, what are you doing, and what makes you sometimes work longer than you anticipated for that week or whatever? What is it? Why you cannot do this at every engagement? And then you will hear immediately why it's not feasible to run it in every engagement, and you know where the bottlenecks are. So for me as a researcher, I think it's very important to do relevant research and to do something that has impact in the end. It's not that easy to have impact right away, like knowing these different categories that auditors use to how they call deviations. An auditor might say, well, what's the use of that for me directly? Well, it's in the longer run, because now we can continue with developing better algorithms that at least resonate with how you think. So that would be my tip for new researchers. Make sure that you are not just only reading what's auditing and then combining your process mining background, but talk to the people in the field. They're very knowledgeable and they are very capable of telling what the challenges are, and work from there on.
Yes, very good tip. Okay, great. And practitioners, what would you maybe want to say to practitioners who are watching? What can they take away from audit research, or any words you have for them?
So for practitioners, I think it's important to, still realize that the way how you structure your data, how you build your event log it's very important. And there are design choices that you need to be aware of. And I remember that's already quite some time ago. But also in more recent conversations, when I try to ask consultants, then, like, how did you build this event log? How did you structure the architecture? That they were often not capable of answering me because there's this distribution of labor. Those were experts in a different country that built the event log. They only do the dashboarding or whatever. And I would recommend looking into that, or find someone who is knowledgeable on that can interpret the decisions that have been taken. Like how do you make it very practical? How do you deal, for example, with do you follow a purchase order, or do you follow an invoice, or do you follow a payment? From which viewpoint do you start? And if you take one viewpoint, then what happens with the branches? So if you follow an invoice, how does your event log deal with the fact that on one invoice there can be multiple purchase orders underlying? How will you deal then with the loops that you can have in the approval, as an approval is always on the parent level. You approve a full purchase order, never a line of a purchase order. How do you deal with that if you're looking at, if you're only following lines of a purchase order or whatever? So try to dig a little bit deeper into the many-to-many relationships that you typically have between the documents and the discrepancy that you have between the activity and the document level. As I said, like, for example, an approval is always at the document level. And sometimes your event log is built at a line level. So how do you deal then with that?
Yeah.
So that would be my recommendation.
Yeah, it's very important really to understand how the data was built, which choices were made, so that you can analyze it correctly and don't have wrong assumptions.
Yes, indeed, correctly.
Okay. Very good. Well, thanks again, Mieke. It was a pleasure to have you on. We will link all of it.
It was my pleasure.
Thank you. We will link everything, and yes. And all of you, like Mieke already mentioned, if you have questions, you can just contact her directly. And for us, you can email us at cafe@fluxicon.com. And we will be back with a new Process Mining Café in October, and we are going to talk about automation. So look forward to seeing you there. Thanks again, Mieke. Thank you all.
Thank you. Bye-bye. Bye.